like the crowd. Today, I will be covering 3 points. First, what's currently happening with Bitcoin, including two possible scenarios. Second, how large players influence liquidity and market sentiment. Third, how the hype cycle actually works and where we might be in it right now. This year, Bitcoin's top was relatively predictable if you look at previous cycle highs. Historically, Bitcoin has followed a roughly 4 year cycle. As we approach the end of cycle, I became cautious and began deleveraging. As you can see from the past top to this top, it's almost 1428 days, which is approximately 3.9 years. One thing I have noticed repeatedly is hopium generated by news channels and YouTuber price targets like 100k, 250k, 500k, and even $1 million. I do believe Bitcoin could eventually reach those levels. However, market rarely moves to such extremes in short period. Expectations often outrun reality. Fundamentally, I view Bitcoin more as a speculative trading market than a traditional asset market. The stock prices typically respond strongly because there is a direct correlation between business performance and valuation. But Bitcoin is different. It does not generate revenues, profits, or physical output. Its primary value proposition is that it serves as a decentralized store of value. There is a no direct physical world metrics that drives prices in same way as corporate earnings. As a result, price action is largely driven by market psychological greed, fear, liquidity cycle, institutional positioning, and leverage. This structure makes it highly speculative. We see similar dynamics in gold. Gold does have a physical value, but much of its price movement is driven by hoarding behavior and macro narratives. When large countries or institutions accumulate gold, prices rise. Retail investors then follow the rally, pushing it further. Eventually, speculation becomes the dominant driver rather than underlying utility. The same pattern appears in AI stocks as well. In some cases, valuation expand far beyond current profit growth due to speculation. When speculation peaks, the risk of reversal increases. In Bitcoin, downturn often follows a cascading pattern. A large institution sells, price drops by 10%, retail investor panics, leverage positions are liquidated, and capitulation accelerates. That's why I believe de-risking or dollar cost averaging out during extreme euphoria is just as important as dollar cost averaging in during extreme fears. No speculative asset rises forever. When something has already moved 100 300% in a short time, risk increases significantly. Now we will look at how Bitcoin's hype cycle is directly correlated with Gartner hype cycle. Let me paste the hype cycle here. Expand this. As you can see, there is clear relation between the hype cycle. The first is like the depths of despair, which is there is no hope and there is only fear here. Then slowly we try to grind up the market, and therefore there's a first sell off that happens, and then there's a bear trap. Bear trap is basically those who thinks that the market is going down, but it actually shoots up. We get some media attention and then some enthusiasm, and then greed kicks in. Once peak greed kicks in, people become delusional. They give high price target like $1 million, and then there is a paradigm shift where the buyers who had bought the Bitcoin in the depths of despair tries to sell those, and there is a very high sell volume that comes here. But people are still in denial that, oh, the markets are falling, and there is a bull trap setup where it tries to bounce back up and everyone thinks that it's going to continue the momentum, but it does not. It returns to normal, and its fear kicks in, and then a great capitulation happens, and then we move into depths of despair. I don't think we are still in that phase. Depths of despair is yet to come, I believe. According to wave theory counts, I believe there will be three waves which will look like something like this. This is one type of possibility. Or we can see some grinding winter going forward. which will be basically something like this. Or we can see some different scenario where the market shoots up very rarely to a new highs. This is a very rare possibility, but this may happen. But depending on the Fourier cycle and the three waves down and the completion of the overall hype cycle, I believe I believe we are going to see a long grinding winter coming. But there is slight a possibility of the market going up as well. So I will suggest, if you want to make buying positions, you should DCA into the market or dollar cost average into the market so that you get an average price of whatever moment the market goes into. That's all from my side, guys. If you like the video, please comment, share, and subscribe the video. See you later.